Hello everybody, this video is entitled Our Stocks Are Bouncing Back Today. We are back for hyper growth. Hyper growth caught a good bid today, and I'm very happy about it. So let's go through it and let's discuss why we're happy. Of course, in general, growth stocks are most likely reacting to the firm odds of a rate cut. This is a Kalshi screenshot. Kalshi is, outcompeting Polymarket right now. 93% odds of a rate cut. CME Fed Watch Tool has it at 89%. I think the market is pricing that a rate cut is in the bag. And of course, risk assets, which, on this channel is what we discuss mostly, risk assets are responding positively, with strategy today bouncing nearly twice as much as Bitcoin is bouncing. Bitcoin is nicely, firmly grounded into the $93,000 price. Clear outperformance of strategy today, nearly 2x Bitcoin, 2 times Bitcoin's performance today. And as always, with super volatile assets like those I cover on the channel in general, it's elevator down, stairs back up. Yes, strategy kind of fell a lot recently, especially in recent weeks. It's going to be the stairs back up. At least in general, that's the way it is. And we have had a slow grind in MNAV, but we are rebounding in the MNAV, plus 3% in MNAV today. MNAV slowly rebounding, although as we know, we don't really care too much about MNAV anymore. Now we care especially about Stretch. Stretch is making a beautiful journey back to trading at par, back to trading at 100. Yes, Stretch is I guess what I'm gonna call the Santi stablecoin. It's the TradFi Santi stablecoin. It's the $100 bill that trades on TradFi rails but gives you a short-term yield. Saylor increased the yield 2 days ago. He announced an increase in the yield, and we are going to get a drop in SOFR, right? SOFR is dropping by 25 basis points, and he increased the yield by 25 basis points. This means that automatically this should get back to 100 pretty darn soon. And when we are back to 100, we know that he's easily able to raise 100 million a week, but we also know that the long-term goal of Saylor with Stretch is perhaps $1 billion a week. I've seen him drop that number a few times in interviews. And of course, these instruments are, if you were scared on Monday morning when we reached 83,000, as the internet calls this, it seems this cycle, they're calling it lettuce hands. It's funny. If you were scared and you buy Bitcoin at 126 and you sell it at 83, well, maybe you got lettuce hands and maybe Bitcoin is not the right investment for you, and this is why Saylor has created Stretch. As you can see, Stretch, this is what I showed in my last video. This is the performance of Stretch until today. It's flat. It's flat. Stretch yielded 5% actually. Total return of Stretch was 5% over the year, 15%. You can see the dark line here. Stretch is not moving. It's a return that is slightly correlated to Bitcoin because that highly yield you're able to get in perpetuity thanks to Bitcoin, but you don't have the crazy volatility that MSTR has experienced over that period. MSTR dropped along with Bitcoin, and it also dropped in MNAV. So if one can't withstand the volatility, if the volatility is too much, if the ride is too scary, there are instruments that Saylor created, which are the preferred. These instruments, being for people who are likely to panic and likely to sell, which is definitely not me on this channel. I mean, as you know, I sit on stocks for years. Anyways, moving on to another stock. Moving on to another stocks. My largest position is Tesla. As you know, on this channel, I don't talk much about Tesla because of two reasons. The hate. There's a lot of Tesla hate. Whenever you cover Tesla, you get a lot of commentaries. So I don't like that. And point number two, I don't cover Tesla because there's tons of top Tesla analysts out there. There's dozens of channels that just cover Tesla. But just know that my take on Tesla is finally Tesla is doing well. Finally, we're bouncing. on Tesla. Holding Tesla was hurting the portfolio in 2024, but in 2024 we had Bitcoin, we had MSTR doing very well. This cycle, this year, I should say, this year Tesla is doing very well, and it's MSTR and it's Bitcoin that is not doing so well. And frankly, thanks to Tesla, it's to the point that the portfolio barely feels the drawdown in MSTR because Tesla's up so nicely. Tesla has been doing well. Each asset has different phases, different cycles, and they don't necessarily peak at different times, and so that allows you to have a smoother portfolio performance. Why was Tesla up today? Of course, Tesla is a big cap. Of course, Tesla is the risk, quote-unquote, views of TradFi, but per TradFi, Tesla is the riskiest of the Max 7. You know, the most TradFi people will even say Tesla is not part of the Max 7. But anyways, why did the stock pop today? In my view, it is because of these insane videos that were dropped last night. Elon Musk last night dropped this video of Optimus, the robot they're developing, and they're going to have the third version, right? The third version is going to be manufacturable, running like a human. Mr. Beast, actually, the world's largest influencer, released a video about an athletic runner beating a robot. That was like a month ago or something. My guess is in a year, he's not going to be able to make that video anymore, because in a year, Optimus might run faster than, you know, a professional athlete. And so if that is the case, I mean, think about the madness. If we solved that, I mean, that's going to be just insane. And of course, this video is circulating all over X of these new hands being manufacturable at scale, and frankly, they are human-like. It's like a human wearing a glove. The movement is, you can see there's AI behind that. You can see this has been taught by AI. This is just unbelievable. As we know, Tesla uses a lot of AI in the products they manufacture, and this Optimus side project is becoming more and more of a main project for Musk, of course, and Wall Street's going to catch on to that. Wall Street's going to put it in the models. That's my take, and that's why I think Tesla is up. We're happy. We're celebrate that Tesla is up. Talking about a third stock, I've been pounding on the table for HIMS for a long, long time. It's HIMS, to me, it's a steal right now. It's an absolute steal. To me, HIMS is a big tech company in the making that nobody sees. That's kind of how I define HIMS. They are a big tech company that nobody sees coming. They've been dismissed and dismissed and dismissed over and over again. Just like if you follow the early days of Amazon, Amazon was dismissed for more than a decade. And then they were taken seriously. I think HIMS is going for such similar periods with the stock being volatile. I mean, we have more than 50% volatility on HIMS. The stock is routinely down 50% from its highs. Right now, I cannot possibly explain why HIMS is so cheap. Their Q3 was absolutely outstanding. They're executing so well. They're executing like crazy. They're so cheap. They're growth adjusted in my metric, EV over GP over RG. They're essentially as cheap as they were when they were $6 when I started covering this stock. They're just a tad more expensive, barely on a growth adjusted basis. And this company keeps executing. So I released a video yesterday. I highly recommend you watch it. Frankly, I should have found a better title, because that video is more me walking through the thesis and the entire thesis. And of course, I'm missing a lot of stuff after this. After I recorded this, I realized I missed a lot of stuff. I missed international. I missed the acquisition machine. I missed the 0 to 1 thinking also in other areas. And what's another area of this 0 to 1 thinking? HIMS House today reporting that they are acquiring a company which actually had a founding round at 100 million for pain-free blood sampling technology, a pain-free micro needle, virtually painless blood collection, a pain-free micro needle. That's a 0 to 1 innovation right there. Of course, most people, ask. Oftentimes, if you ask, why do you not donate your blood? Oftentimes, the reason people will give you is it's painful. I don't want to donate my blood. It's painful, right? And it doesn't matter if they give you a gift card or whatever. People don't want to do it because a lot of people don't like needles, right? It's evolutionary. We don't like sharp objects. That's just evolutionary. And this is a 0 to 1 thinking. 0 to 1 thinking is when you have a technology that is an order of magnitude or more better than the current state of the art. So in the current state of the art is, a needle, it kind of hurts. Like it's like a wasp sting, essentially. Except it doesn't linger on after you're done, but it's essentially the same thing, a needle. And they're working on a micro needle that you wouldn't even feel. To me, that's a 10x improvement. And surely, maybe you're one of the few people who really don't care about needles, but surely there's a lot of people who care about needles. Surely the reason why Novo, for example, is spending so much money trying to get a oral GLP-1 weight loss targeted peptide, right? And they may get it in December. We'll see. But the reason for that is because people don't like injections, right? So could this blood draw tech also be transferred to an auto pen, an auto injection pen, where you can sell all sorts of peptides, right? And then you would have people who go to HIMS, not for the recommender system, not for the business model innovation of not having to pay for the doctor visit, no prescription, no pay, not for the network of subscribers, not for the brand, not for the convenience of a digital pharmacy. No, they could go there because they know that it's going to be painless at HIMS. While if they go to the local phlebotomist downstairs at the hospital, you gotta walk across the hospital, go see the phlebotomist. They know that phlebotomist is gonna be pretty much bored at their job, and sometimes they do a good job at drawing blood, sometimes they hurt you, sometimes they don't do a good job. And this is especially true for people who don't have easy veins to access, and so if your BMI is 30, you're gonna have a harder time getting your blood drawn, right? And so that's, to me, that's a 10x improvement. It could be a 100x improvement if you are people who have fears or who have not easy not easy blood circulation, or not easy veins, to collect the blood. So this is it. And of course, we live in the era of 0 to 1. We live in the era of 0 to 1. I keep having people tell me in my comment section, like talk to me about moats or something. We don't live in the era of moats. Like this is not Michael Porter competitive strategy barrier to entry anymore. We live in the era of 0 to 1. Right? We live in the era of the best and the cheapest. We live in the era of monopolies, natural monopolies, because you're the best. That's the era we live in. We live in the era of speedy innovation, very, very quick innovation, where others can't catch up because you're always multiple steps ahead. That's how strategy is done these days. It's not done with moats anymore. And somehow people are still hanging on to books like The Intelligent Investor. People are still using PEs. People are still reading, stuff like competitive strategy with really outdated stuff, like fully outdated stuff. This is Notes on Startup, Peter Thiel, 2014. This should be your bedside book. This is the Bible of how businesses win in the 21st century. Of course, no book advice. Anyways, let me finish. Let me move on and finish by having the honorable mentions of the day. So a few honorable mentions today. CleanSpark. Oh, turns out AI is real after all, huh? Data centers are real after all. I mean, it was a nonsense. Like, they had dropped like crazy on Monday. Total nonsense. Yeah, of course AI is real. Of course CleanSpark going to be able to monetize that energy that they got, and that's true for so many in the sector. So many of these miners going after HPC, high performance computing, they're going to run. They're going to do very well. Cooler. Oh, the market is realizing slowly that Cooler should not have been free. Cooler, the space battery company with batteries on Mars, batteries on the moon, batteries in satellite, the battery supplier to the US military, batteries that don't blow up, batteries that don't explode. Cooler, the vibration management company, right, that makes a lot of, and the thermal solution company, very interesting company, very interesting product, investing heavily in R&D, very unique products, was free. It was free. Like 2 weeks ago, this company was free. because it was trading for less than the Bitcoin on the balance sheet. It's total nonsense. It was trading for less than their Bitcoin on their balance sheet. I cannot possibly explain that. So anyways, this market was absolutely crazy. And lastly, I'll conclude with this DeFi. So DeFi Development Corp, of course, trading below the SOL per share, trading below how many SOL they have in their balance sheet. Solana is pumping right now. And you know, it was pumping as I started recording this video, so I don't know why. I need to go see why it's pumping. I don't know why it's pumping, but it's pumping right now. And I'll conclude this video by saying, folks, blockchain is real. Blockchain is not fake. It is absolutely, absolutely real. Web3 will replace financial markets, will replace banks, will replace insurance companies, and then in more finer developments will likely replace social media, telecommunication system, you know, file sharing companies, data sharing companies, streaming, YouTube type stuff, you know, AI generated type stuff. You know, any digital company of our era can be built on the blockchain. You can build a company from scratch on the blockchain, right? And Kalshi, for example, Kalshi, which is taking over. Kalshi is taking over Polymarket. Well, Kalshi is powered by Solana. Polymarket is powered by Ethereum. So it's going to be a war between Solana and Ethereum, but these public blockchains, they are quote unquote world computers on which you can build entire companies. And of course, to build these companies, what do you need? Well, you need the Solana token to power these apps. The Solana token is what powers these apps. And you spend your Solana token to build these apps and power these apps. Solana is the fuel that runs the blockchain, right? And it's a very, very efficient blockchain. $145 worth of Solana. So one Solana, you can process a lot of transactions. You can pay for a lot of transactions with that price, a lot of smart contracts worth. And as this network becomes more and more valuable, Solana is gonna become much more valuable. And it seems like the market is catching on to that today. You know, it's been absolute nonsense. I mean, like I said, and I'll conclude with this. You know, if you lost money, don't blame yourself. The 2020s are very tough. Well, you know, you should always take responsibility for your loss, but the 2020s are a very tough decade. They are a tough decade. As someone who invested throughout the 2010s, I can tell you the number of since 2008, the number of since 1989, the number of, you know, biggest drawdown intraday ever in the history of the world stock market, which we have in April. We had that in April, if you remember. The number of the worst ever that we've had in 2020 have been just insane. You really, really, really gotta be, you know, attached to your seats. You gotta be attached to the rocket to invest in the 2020s. And you know, with these predictions markets and all of that, it could get even wilder. With tokenized stocks and perps being now available on Solana and people going 10x on Tesla, it may get even wilder. So, you know, be even more careful with margin. Be ever more careful with options. Don't get wiped out. Your job is to not get wiped out. These revolutions are real. But if an asset has the ability to go up 70% in a year, this asset, and I'm talking about Solana specifically here, this asset also has the ability to drop 70% in a year. If you make a bet on a highly volatile asset, volatility is vitality. If you make a bet at any point in time, it means you gotta be okay with a down 70%, because the counterpart to that is that you're also in for a plus 70%. But over the long run, volatility comes really, really close to the return over the very long run, over a 5-year period, right? Over a 2-year period, you got macro, you got madness, you got elections, you got all of that sort of stuff. But over a long-term period, the volatility closely matches the return, right? That's, I mean, if you go back to classic finance, this is some sort of stuff explored back in the day in classic finance, with like the Black-Scholes formula and all that sort of stuff. Anyways, I'm done. This was not investment advice. This is not financial advice. This is just entertainment. I hope you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.